It's all too simple in the media, Gene. Tell me about the ambiguities right now of the U.S. dollar, and what's the Pimco call?
Yeah, I mean, there are a lot of ambiguities. I mean, it's not dissimilar to the bond market where there are so many differences in the current cycle. We think we are close to the end of what has been an 8-year dollar appreciation cycle. And this is really coming as a function of U.S. growth slowing. As you know, a big part of, any call on the dollar relates to rate differentials. Rate differentials in favor of the dollar peaked almost 6 months ago. We think validation by the Fed of looser policy would probably be an accelerator for a turn in the dollar. But the most important thing is really that, the U.S. is slowing down to the rest of the world. And it has been for the last, year and a bit, basically in a league of its own from a growth perspective. And so, this seems to be an important turning point. Against that, I think we would also say, though, that some of the elements of what would mark a more significant sell-off in the dollar are not there. The current account deficit is not expanded significantly in spite of U.S. growth outperformance. And it's not obvious that, the U.S. dollar is going to lose its yield advantage anytime soon. It's just that advantage is going to compress. And so really it's about, what do you want to sell the dollar against?
Right. What do you want to sell the dollar against, Gene? Answer your own difficult question.
I was hoping you would ask. I think we would like to sell it against a combination of things. I mean, number one, at one end of the spectrum, we find the yen very unique in that it is a quote-unquote safe currency that's actually cheap. Typically, at this point in the cycle, and given all the uncertainties, you would not expect it to be cheap. So we find the yen an interesting vehicle, almost like a complement to being long fixed income. But on the other side of the coin, typically at this point in the cycle, you have much more overvalued emerging market currencies. And at this stage, in this particular cycle, they're actually quite undervalued, about 15% by our estimate. So we'd like to be long a number of those.
Gene, help me here with the first mercantilist. The president went after Mr. Draghi yesterday on euro, euro dollar rather. Everybody went mental about it. What's the president get wrong?
I mean, I think, the challenge is really in how, how do you steer the dollar weaker without effectively undermining, your own growth cycle. I think he feels like he can badger other countries to change their policies in some way. I'm not sure it's clear to him that imposing tariffs on other countries should make their currencies depreciate against the dollar rather than appreciate against the dollar. It's either one or the other. So there was a brief realization with Mexico earlier in the year where he seemed to kind of understand that. But, the concern, I think, going forward is that, the policy of mercantilism expands into currency space and you actually get inclusion of currency manipulation somehow linked to tariffs. There's actually a Commerce Department proposal to that effect going through the motions.